Hello everybody, welcome to CMA classes. This is Miss Santosh, a CMA finalist. Today I am going to start another chapter of direct taxation, which is going to be clubbing of income for CMA final and CMA final students. Okay, so first of all we are going to club the income, as the name says, clubbing of income. Okay, but there are some specifications, some exceptions in this case. In some of the cases we are going to read out. For example, like what would be the treatment for revocable property and what would be the treatment for irrevocable property, okay, in case of minor income, okay, or the income which is generated for spouse, what would be the treatment in these cases, okay. So yes, we are going to read out and find out the treatment for all of them, and some other cases are also there. So yes, let's get started. First of all, clubbing of income. What is the meaning of clubbing of income? Applicability of clubbing of income in various circumstances. The clubbing provision applies to income and loss, both cases. Capital gain in further transfer of the asset by the transferee will be considered as income and it shall be clubbed in the income of transferor. Let me read it out. Capital gain on transfer of asset by whom? By the transferee, okay, and it would be considered as income and it shall be clubbed in the income of transferor. Third says the income derived from the converted from all the assets shall be clubbed in hand of transferor. If part consideration is payable or paid, which means inadequate consideration, they are talking about the inadequate consideration, then only the inadequate consideration will be clubbed in hand of transferor, otherwise not. As they are saying, if any of the part consideration is received, then only the treatment, that would be definitely inadequate consideration, that would be clubbed in hand of whom? The transferor. Otherwise it's not going to be clubbed in hand of transferor, it would be clubbed, it would be the income of transferee. Clubbing provision will not be applying the income derived from the clubbed income. So yes, this section 60 says about the transfer of income without transfer of asset. Okay, so very first section is transfer of income, when the transfer without transferring any asset, okay. The revenue is a subject to taxation in hand of transferor when it is transferred without the ownership of the asset that generated the revenue being transferred as well. The most common instance of this is when a property owner requests that a renter pay the rent in name of their parents or spouse or children. So let us illustrate using a straightforward example. X receive rupees 20,000 per month in rental income from Delhi home. However, he requested that his tenant deposit rental payment into his wife bank account, okay, in order to avoid any paying tax. In this instance, even when the money is deposited into the wife's account, X will be taxed on it because he moved the source of income without changing the house legal ownership. Okay, as this the example is saying, the Mr. X haven't transferred any of the ownership to his wife's name. Okay, that's why the income received by the rental income received by Mrs. X would be taxable in the hand of Mr. X, as they are saying the income, the transfer of income without any transfer of asset, right? If the asset was actually transferred into the name of Mrs. X, in that case this would not be arise, right? Yes, the income would be taxed in hand of Mrs. X. Okay, when doing their taxes, people frequently make this error. Thus, the next time don't forget to transfer the assets legal ownership before transferring the revenue. Okay, so hope so this was a very simple example and you are able to understand what is the transfer of income without transferring of asset. Okay, let's go for revocable transfer of assets, section 60. 1. Transfer income arising from transfer of asset by two ways. First, revocable transfer, okay. Second, irrevocable transfer. Revocable means we are going to get the asset back, okay, the property back. So in that case, in case of revocable transfer, income would be taxable in the hand of transferor, okay. But what happens, the asset is not revocable, the transfer is not irrevocable. In that case, income would not be, this is not taxable in the hand of transferee, okay, not clubbed. Hope so this is simple, clear. Okay, so let's go for what is written in this section. A clause allowing the transfer to reclaim the ownership of the item at any moment after it has been transferred to the recipient in kept in the transaction. It is known as revocable transfer. In this scenario, any income from any asset that is transferred in a revocable manner is subject to taxation in the transferor's hand under the term of clubbing of income. So it's very simple. In case of revocable transfer, we are going to add back the transfer, the asset to whom? To in the hand of transferor, right? It's going to be taxable in hand of transferor. Okay, so hope so this is clear now. Yes, let's take the another example. Ankit gave Babita ownership of his house. The deal stipulate that after 2 years, Ankit will receive back the ownership. What is this? The example of revocable now, because he is getting back that asset, right? According to the clubbing of income, any income that Babita received from the house during the 2 year will only be included in Ankit's income. Okay, so yes, that would, as the income, the property is going to get back to the original owner of that asset, right? So that would be taxable in hand of transferor. Okay, so yes, this was also quite easy. Section 61 is about the revocable transfer of asset. Okay, let's go for 64. So 1A, which is of minor's income. So yes, here I have written about section 64 subsection 1A, which is of minor's income. Okay, all other income except specified shall be taxable. Okay, so what is they are talking about? Let's say they have divided into two parts. First, all other income except the specified shall be taxable. Okay, so yes, second part says the following shall not be clubbed and taxable in hand of minor. First of all, very first thing they are saying ki there are some income, okay, that would not be taxable, okay, and some would be taxable in hand of minor. Okay, so yes, let's go and find out what would be the treatment in two cases. So first, if the parent marriage is having more income, they are talking about they are parents, right? If they are mother and father, the child is with them. Okay, the parents are not separated. Okay, in that case, the income, the parent which is having more income, to those parents, the income would of the minor child would be clubbed. Okay, so yes, subset clubbed in the hand of parent who is having more income, the higher income among both of them. For example, Mr. X and Mrs. X. Mr. X is also working and Mrs. X is also working. Okay, so he is having the income of 10 lakh per annum and she is having the income of 8 lakh per annum. Okay, okay, don't say equality in this case. Okay, chalo, okay. So in this case, as Mr. X is having more income, higher income among both of them, the minor's income, the child income is going to be taxable, is going to be clubbed in hand of Mr. X. Okay, let's take another example. What if Mr. X is having 10 lakh per annum, Mrs. X is having 20 lakh per annum. ठीक है, अब equality वाली बात हो गई, ठीक है, because she is having some more qualification and all. ठीक है, so the minor's income is going to be clubbed in hand of Mrs. X. ठीक है, simple है भैया. Okay, so if this was the case when parents are living together, they are not separated. Okay, second case, the same part, when the parents' marriage do not subsist, which means the parents are not together, they are separated due to any of the reason. Okay, they are separated and they are living apart. Okay, so in that case, it's going to be clubbed in hand of parent who is maintaining the child expenses. Okay, whoever the parent among both of them, Mr. X is maintaining the expenses of child, in that case, the income of minor is going to be clubbed in hand of Mr. X. For example, same thing, if Mrs. X is maintaining the expenses of that child, in that case, the income of child, the minor child, is going to be clubbed in her income. Okay, so hope so this was clear. Okay, second case, following shall not be clubbed and taxable in hand of minor himself. What are the cases? If the income is earned out of skill and talent, if the child is very much talented, ठीक है, and from that talent or from that skill he earned the income, in that case that income would not be taxable in hand of any of parents, okay, whether they are living together, whether they are separated, okay. So yes, if the income is earned out of skill and talent, second, manual work is done by him, okay, if from that manual work he earned any of the income, again that would not be clubbed in both of parents' income. Third, earned by handicapped, covered under section 80U. If the minor child is handicapped, ठीक है, as per section 80U, okay, so the earning earned by that minor child would again not club in both of the parents, ठीक है, income. So these are the things where the parents are living together, okay, and parents are not living together, they are separated. This was the first case. Second case, if the income is earned by the special skill, talent, manual work, or the child is the disabled child under section 80U, in that case the income earned by him will not be clubbed in parents' income, okay. So let's read out the section 64(1)(a), okay. So ये any income arising or accruing to your minor child, ठीक है, where the child include both stepchild, okay, and adopted child. So whether the child is stepchild or adopted child, this is going to be apply for both cases, all of the cases. The clubbing provision apply even to the minor married daughter, okay. So income will be clubbed in hand of higher earning parent. First wala case, note if the marriage of the child's parent doesn't subsist, first wale mein second part, income shall be clubbed in income of that parent who maintained the minor child in the previous year. If the minor child income is clubbed in hand of parent, then the exemption of rupees 1500 is allowable to the parent. Those, for example, if they are separated, I am taking first part ka B, first case ka B part, ठीक है, where the parents are separated and Mrs. X is maintaining the expenses of minor child, in that case she will get a deduction कितना 1500, ठीक है, 1500 exemption will be allowed to her, ठीक है, to the parent who is actually maintaining the expenses of child, ठीक है, okay. So what are the exception? We know exception. Let's read out jaldi. Income of the disabled child, disability of the nature specified in section 80U, income earned by manual work done by the child or any of the activity involving the application of his skill or talent or specialized knowledge and experience. Income earned by the minor child, this is major child, this would also include income earned from the investment made out of money gifted to the adult child. Also, money gifted to the adult child is exempt from the gift tax under the gift to relative, okay. So hope so up to this was clear, okay. As so far we have covered two sections. Let's go for section 64 subsection 1 clause 2. This is about spouse, okay. What if, for example, we have seen there are so many examples, mother and father educated, they want to continue their empire, right, they are running any business. In that case, if they are having any child, they'll say you should be the director of the company, okay. First case, if the child is qualified for the designation, in that case that would be the income earned by that person would not be clubbed in any other person's income. This is, I have taken the example of mother and father, but in this case they are talking about spouse. Let's say Mrs. X, ठीक है, same Mrs. X, ठीक है. If she is having any of the specified knowledge, experience, technical knowledge and all, in that case she will have that income in her hand, that is going to be taxable in hand of her, ठीक है. But if she is not having any of the experience, any of the knowledge, just because she is the wife of Mr. X, right, so that would not be her income, that would be clubbed in Mr. X income, okay. So yes, this is what this section saying, spouse earned income where individual has a substantial interest. So we have to understand what is substantial interest, okay. So spouse doesn't possess any of the professional qualification or technical qualification. Remuneration shall be clubbed in case of in hand of transferor, okay. So what is this substantial interest? For a company, more than 20% of the voting right. For in any other case, it's going to be 20% of the profit, okay. So if the spouse is earning from the designation, I mean the remuneration in that case, where the individual has substantial 20% of the voting right or profit. ठीक है, in that case for the substantial interest wala, second wala case, he or she is not having any qualification related to professional or technical. In both of the cases, the remuneration earned by the spouse would be clubbed in the hand of transferor. Okay. So yes, salary commission earned by spouse under section 64 subsection 1 clause 2nd. If your spouse receive any remuneration irrespective of its nomenclature, such salary, commission, fees or any other form and by any other mode, cash or in kind, from any concern in which you have substantial interest, that's going to be clubbed back. Okay? Income shall be clubbed in hand of taxpayer or spouse whose income is greater before clubbing. An exception to the clubbing, definitely what's going to be exception if the spouse is having the qualification, right? For example, she was Mrs. X was appointed as the director of the company and she is qualified, like her qualification is MBA and she's having some practical experience in other company, right? So definitely her income is not going to be clubbed in hand of Mr. X. This is clear, right? So yes, an exception to the clubbing is not allowable if spouse possesses technical or professional qualification in relation to any of the income arising to spouse, and such income is solely attributable to application of her technical or professional knowledge and experience. Okay, so yes, this was all about in this section. Let's go for the transfer of spouse in case of inadequate or without any consideration. Okay, let's talk if any of the transfer happens and either the consideration is not inadequate or there was no consideration involved in that case. Okay, so transfer to spouse for inadequate consideration or without consideration, section 64 subsection 1 clause 4 says income from house property or in case of other income. There are two parts. Okay, if the income is from house property, it's going to be taxable in hand of transferor under section 27 and it would be known as deemed honor. Okay, yes, but in case of other income, taxable in hand of transfer under section 64. Yes, in both the cases it's going to be add back to the transferor income. Okay, and but there are some different head of income. For the first, for the house property is going to be income from house property under section 27 wala, it would be assumed as deemed honor wala. Okay, and other case it's going to be taxable in which head, other income from other sources, and under section 64. Gift is not taxable, income out of gift is taxable. What I say, gift is not taxable but income out of gift is taxable. Okay, so yes, this section says about the transfer to spouse for inadequate or without consideration, section 64 subsection 1 clause 4. Direct or indirect transfer of asset to your spouse by you, right? Mr. X transfer to Mrs. X, मिसिस एक्स को ट्रांसफ़र किया, क्या हाउस ट्रांसफ़र किया, ठीक है, विदाउट एनी कंसिडरेशन, बीवी है भाई, ठीक है, कर दिया. Income from out of such asset would be clubbed in hand of transferor and she have rented this, ठीक है, rented this to whom? M. Okay, and the income earned by her, which is the rental income, ठीक है, this would be again clubbed in hand of Mr. X. ठीक है, rent would be clubbed in hand of Mr. X, not Mrs. Y, Mrs. X. ठीक है जी. Okay, exception to the clubbing of income is following cases where the asset is received as part of divorce settlement, where if this asset was received as a part of divorce settlement. Yes, if asset are transferred before marriage, right, शादी से पहले, शादी टूटने के बाद, ठीक है, no husband and wife relationship subsist on date of accrual of income. Same thing, if they are separated, if they are divorced, if they are not living together मतलब separated, ठीक है, ऐसे नहीं कि they are staying in different state and still they are in a relationship of husband and wife, नहीं, ऐसा नहीं है. Okay, and the asset is acquired by the spouse out of pin money, which is an allowance given to the wife by the husband for the personal and usual household expenses, right? If it is arise from this pin money, in that case this is not again to be add back to the transferor income. ठीक है, okay, hope so this was also clear. So yes, in case of divorce settlement. In case of if the transfer of asset happens before marriage and there is no relationship between husband and wife, they are living apart, they are separated, okay, yes. And if the, but one more thing, one more exception, if the asset is acquired by the spouse out of pin money is what, allowance given to the wife by her husband for maintaining her personal expenses and all, okay, and usual household expenses and all, okay. So this is all about spouse wala section. Let's go for very small sections now, okay. Daughter-in-law, okay. So 64 sections 1 and clause 6 says about transfer of the asset transferred directly or indirectly to your daughter-in-law for the inadequate consideration. Any income for such asset transferred is going to be clubbed in hand of transferor, okay. So yes, section 64 subsection 2 says about the HUF family wala, Hindu undivided family. In case a member of HUF transfer his individual property to HUF for inadequate consideration, convert such property in HUF property, income from such converted property shall be clubbed in hand of individual. Same thing. Yes, this is another important part, cross transfer. We know this, okay. Let's go for one example, then we'll get to know what are this cross transfer means, okay. In case of cross transfer, for example, A making gift of rupees 50,000 to the wife of his brother B for the purchase of house by her, and simultaneously gift by B to minor A's minor son of share in the foreign company worth rupees 50,000 which is owned by him. The income from the asset transfer would be assessed in the hand of deemed transferor, okay. If the transfer are so intimately connected as to form part of single transaction, and such transfer constitutes consideration for the other by being mutual or otherwise, okay. Thus, in the instant case, the transfers have been made by A and B to the person who are not their spouse or minor child, or as to circumvent the provision of this section, showing that such transfer constituted consideration for each other. This simply means they are doing the transaction they are making a cross transfer, right, and ultimately what is going to be happen, it's going to be taxable in hand of transferor. Simple, ठीक है, transferor के hand में नहीं. There was one of the case is CIT versus Keshavji Morarji, ठीक है. In this case it was observed that two transactions are interconnected and are part of the same transaction in such a way that it can be said that the circuitous method was adopted as a device to evade the tax. Main purpose was to evade the tax. The implication of the clubbing provision would be attracted. Accordingly, the income arising to Mrs. B from the house property should be included in the total income of B. Okay, and the dividend from the share transfer to A's minor son would be taxable in hand of kaun sa wala person, A, assuming that Mr. A's income is higher than Mrs. A. Okay, this is simply we know. Okay, this is because A and B are indirect transferor to their minor child and spouse. Okay, so yes, there was a transaction done between them, transfer done between them, between A and B. A transfer the income, for example, income to Mrs. B, and B transfer some of the shares to whom? To A, child of A. Okay? This is simple cross transfer and it was done to avoid the tax, to evade the tax. Okay? In both of the cases, the income earned by the minor child, for example, he was a minor child. Okay? The minor child would be taxable in hand of whom? The transferor. कौन है transferor? As there is a transfer कौन? Mr. B, but it would be taxable in hand of Mr. A. This is actually directly or indirectly connected. Okay, here the transfer was indirectly connected. Okay, that's why it's going to be add back to Mr. A's income. Okay, what about Mrs. B income? It would be clubbed in case of Mr. B. Okay, so hope so this was cleared. That's it in this section, but there are one more point, how to avoid the clubbing of income. Okay, now we have explained the provision way transaction which are considered under clubbing of income. Let's explain some of the unique way where you can plan your taxes without clubbing the income provisions. So very first, transfer of amount to parent and interest earned on such investment. Okay, this is one of the way where we can avoid the clubbing of income. Transfer the amount to the parents and invest and interest earned on such investment. Any amount transferred to your parents as a gift will not be taxable, as we know this. Okay, in hand of your parents, and let us say that such amount is invested in fixed deposit. Interest on such fixed deposit will continue to be taxed in hand of parents, and clubbing provision will not be applicable, as we have transferred that amount and that would be not clubbed, that would be clubbed into our income. Okay, that would not be the income of parents, and the parents have actually invested in fixed deposit or any of the thing. Okay, the return coming from that income, right, the interest income would not be, yes, definitely. Okay, so this is one of the, we can avoid clubbing of income. Second, gift received at the time of marriage. Any gift received during the time of marriage will not be taxable in hand of recipient. We know this, okay? And thus any income arising on such investment will continue to be taxed in hand of recipient. Third, investment in PPF. Since interest earned on PPF is exempt income. And one more thing, income, if we are investing in PPF, it's also है ना as per old scheme है ना 80 में deduction ना. हाँ जी, even if you invest in PPF in name of your spouse or minor child, okay, not even the PPF is done in your name, if it is done in your wife's, the spouse name or the minor child's name, it would definitely be exempted and interest will not be taxable. Thus clubbing provision became irrelevant in this case. Thus there is an investment cap of rupees 1,50,000, as we know, as individual in PPF. You can open multiple PPF account in name of your spouse or minor child to get this benefit. Okay, so yes, this was all about clubbing of income, guys. So that's it in this section, in this chapter. So hope so it was clear, it was easy, nothing was much in this chapter in fact. Okay, so yes, that's it guys, we'll meet you in the next video to discuss.